Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, over the past 5 consecutive days, we've noticed that the Australian dollar has taken challenges towards that 73-cent handle, but struggled. And there is a couple of reasons behind that. If we look back on recent history, we can see back in September, there's been many stabs above 73 cents and failed, like we have seen over the last few days and also last week or the beginning of November. The other factor is, if you notice, as prices have climbed and the indicator has dropped, being the RSI and also being the MACD, is bearish divergence. I'm a very big supporter in terms of bearish divergence, as well as many other indicators that I see in this pattern, therefore supports the negative sentiment. With the immediate target coming in close to around 72.65, then looks down towards the recent lows around 72.25. It is there, I believe, the market breaking would see a further slide down towards the 71-cent region. Divergence is a very powerful indicator or signal in terms of as prices close higher, the indicator closes lower, and we will see a snap to the downside. Any advances above 73 cents or around that 73.25 to 40 area should continue to fail. As we can see, the euro is back again at the top side of this range after many rejections. It is viewed that while the dollar index, which measures the greenback strength against a basket of 6 major currencies, and with the euro weighted at 57.6, the fact is that we may see a possible squeeze if we close above the level of 118 or close to about 119. And the reason behind that is the fact is the dollar index is currently trading around 92, and therefore, as long as that maintains, should keep the bias eventually back towards this level of 117.80. It has been a very choppy week for both the euro and the US dollar, but let's see how the market plays. I do feel there will be another rejection from this top side and eventually see it turn back to the bottom of the range. Dollar yen, well, is this a bull camp or not? There is an inverted hammer, and do be aware of that, as some view this as a potential turn in the trend. Although it doesn't mean to say that the market is a buy at these levels or expect to see demand. Either way, is that the fact is there's a little bit of caution to this hammer, and therefore if you are trading from the short side since the cap around 105.50, as the markets can see here, all the bear candles, is consider to look upon your risk management and adjust your stop losses and take profits according to that, just in case we do see demand come back in front of this level of 103 figure 20, because it did snap to the upside. The pound is pushing back towards our top side, but it hasn't cleared that level of 132.1995. It's had a couple of stabs there, and we're still locked in this 131 to 133 range. There has been hopefully some updates in the Brexit either today or over the weekend, and that could give a slight bullish tone, but if disappointment comes through again, then we may see a drop back to the bottom side of the range. Sterling yen's been a little bit choppy over the last few days, the rejection from the recent trigger level of 139, but nevertheless it is slowly depreciating, with the MACD breaking nearly through the access point, and also the RSI is negative as it's underneath the midway point, could give further indication to the target of 135.90 or lower. But for now, let's see if the market can continue its slide. Looking at gold, well, the market is still very much vulnerable to the downside. We had another stab to the bottom side of the range and posted a low of 1,852 overnight. It is assessed from the technical point that the marriage between the RSI and the MACD is still negative, and with a trend in place by the ADX does give concerns that a break of 1,848.52 or a close beneath there of New York could see a very strong significant downturn to around the 1,750 area. Let's see if the market can stage another bullish correction like we have seen back in early September and also here in early November. So do be on your guard if you're trading from somewhat short side, or if you've managed to be able to get that short position in play. Still be aware that in case we don't get a break, then we may see a short squeeze because we're still locked in these parameters. Finishing up with oil. Well, there's not a lot to go really, is there, when you look at this pattern? There's a lot of indecisive candles, and the technicals are somewhat lackluster. Could still see a move down towards that 38.60. Reassess from there, with the cap still holding around $43.80.90. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the intraday report. And I hope you enjoyed a great start to this wonderful weekend.